Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. 18th of October 2022. What's today? Tuesday. Green again on the screen. Bear market rally intact for now. Talked about this for a couple days. The buzz today all about Bank of America's Michael Hartnett, who's got a survey out there, a fund manager survey that says he says screams capitulation. That's got everybody fired up. Further, another B of A, Corey Hall, I'm not sure who he is, if he's the head of trading or something, I don't know what he is. But he said B of A fund flows show we have made a bottom. So B of A just getting all juiced around the bull side here today. And then, at the end of the day, are we overdue for a bear market rally? Absolutely. We are overdue for a bounce, no question. You got Morgan Stanley, the biggest bears in the room, and dead right all year talking 4,000 as possible on a rally here before year end. So if you feel like you need more exposure and you want to play along, one thing to think about potentially would be just small caps for a few reasons. One, I think it's a little more responsible in terms of flows. They are cheaper than larger peers. They've gotten the crap kicked out of them just, on speculation of going into recession, what have you, weaker balance sheets, all that stuff that is kind of endemic with a small cap. But at the end of the day, they're not as affected by foreign exchange. Most manufacturing and sales occurs in the same country with not as much exporting. And if this is the bottom, which I'm very skeptical of, but if it is, small caps historically have led the way out of recession, out of market bottoms. They've outperformed. So you've got a case where, and it's the only group that hasn't made a new low since June. So technically looks better than NASDAQ, looks better than S&P. Lori Calvestino over at RBC does good work. She is all fired up about small caps on a relative basis. So I like that. I may do a rental there myself. Rental meaning I will play it until I decide that it's not time to play anymore. Probably not tuck it away forever. Cyclicals also obviously lead out of downturns. I'm more comfortable going with industrials if you wanted to do something there on the infrastructure side, whether it be like an Eaton or an Emerson with exposure to grid and projects. I don't mind that. Like a cat kind of thing. I don't know if I see that necessarily. Within semis, obviously another hugely cyclical space. I would rather go semi-capital if I had to, just given the visibility on upcoming spending. We got the CHIPS Act passing here, reshoring of manufacturing in the United States. Semi-capital is going to be a huge beneficiary of that. I mean, my gut is it's still too early, but I'm just saying if that's your preference, I'm not doing it. But if you want to do it, there you go. Lockheed Martin, great quarter. I mean, good quarter. In general, defense, we've talked about this, haven't talked about it in a while, but I think it continues to be a secular winner. Northrop's been the best performer. Lockheed's holding in there. Raytheon also a good one. L3 Harris, I think, has had some positive write-ups recently. Goldman Sachs, smartest guys in the room, another solid quarter. Stock trading around book value. We own it. I like it. It's one of those things where capital markets activity, new issue, is pretty much at zero right now. So a lot of upside for one of the leaders in that space going into probably, second half of 23. I'm not sure it'll be a first half of 23 type of an event, but that's something to think about potentially for GS. You do have that upside. And then William Blair, I didn't talk about it. They came out a couple days ago, I think, initiated on air test, AEHR. Small cap I've been talking about, wrote about it in my newsletter. Oh, only to investors. So if you're not an investor, you didn't get this little write up. But they came out with a 2450 target. This thing's acting great. Their William Blair's thesis is a lot like what we talked about on the silicon carbide side, with a lot of different verticals. The biggest, most sexy vertical is EVs. William Blair also had positive commentary on Semi and Wolf as well, unsurprisingly. But love the air test. A couple days ago, last week, I think they announced a new customer win. Stocks, it could leave the building here soon. They have a 2450 target on it, William Blair. If this market just gets juiced, Airtest is going to juice its way through that target in like 3 days. This thing is it's very volatile. So buyer beware. And that's it. Have an awesome day. Talk to you tomorrow.
Some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.